I want my LTC.com. That's Lyn Rowe's website. Lyn Rowe, certified financial planner, joining me as she does each week here on the Lucia Show, helping you to make better money moves. Lyn, a long-term care specialist and strategist, and my good pal for, should I tell them how many years? Let's not.
Don't.
Let's just say a long time.
Long time.
Lyn, thank you for joining us again.
Thank you, Ray.
You sent me a text the other day, you know, and it was like flashing red. Warning, long-term care insurance premiums going up for certain companies in California. And I have to say this again?
Yeah. Well, no, actually, this is a carrier that hasn't raised any premiums in California. They are now approaching a point where they're going to do that.
It's probably my carrier, isn't it?
Yeah, I'm not going to go there.
It's my carrier. It's mine. It's my policy.
But here's the good news. They're not raising the premiums on the existing insureds.
Oh, good.
They're simply going to be raising the premiums on people who are going to be applying going forward. So if you haven't applied, the moral of that story is apply now, because then you can have those rates for a long period of time.
Yeah, it doesn't guarantee the rates forever, but they would have to increase the entire class. So mine, I've had, Jeannie and I, we've had ours like, how long, 4 or 5 years now? 4 years? And so we haven't experienced any rate increase, and it's good news that they're not going to raise mine.
I had a gentleman in the other day who bought a policy from me 11 years ago, and he had his first rate increase, and it was 10%, and he said, you know, I think that's not very bad. I think I'll keep it that way.
No, I think it's really good. What I said before the break, I don't know if you heard my comments, but the reason that rates are going up really is not necessarily a bad thing.
Right.
It's a good thing in many respects, because what it says is people are living longer and using the policies.
That's right.
If you weren't using the policies, they'd be cheap, right? There's supply and demand here.
That's right. Yes. And you talked to someone earlier, I understand, that had experienced that with family members.
Yes, he just called. In fact, our last caller was talking about his mother, who spent $10,000 a month for 13 months. She was in a facility for 13 months. Interestingly, according to the stats that I've seen, females spend almost twice as long in nursing homes and so forth than males do, right?
That's right. That's right. Well, we live longer. That's for starters.
Well, we just die of broken hearts, you know, because you guys are living longer.
But also the worst part of it is that 73% of women are going to need long-term care. Men, you know, you guys get off kind of easy. Only about half of you need long-term care.
Well, I don't know if that's easy, because we croak earlier.
Yeah,
so,
that's true. That's true.
73%. Now, you and I have talked about this before, and I've evaluated these before. There are these policies. Let's say you're just anti-paying premiums, as many of us are. You just don't want to pay premiums, but you know you need to have an emergency fund. And let's say your emergency fund's 50 grand or whatever. There's a way that you can convert that emergency fund into a long-term care policy, yet not give up any of the principal and still have liquidity?
That's exactly right. There are policies that are what some people call them hybrids. Excuse me. They, for example, a gentleman age 55, if he had 100,000, let's say, because I just ran these numbers yesterday, 55-year-old could have $48.91 a month for 4 years just by putting in 100,000. But here's the good news: if he doesn't use the long-term care, the premium is not lost. His family actually benefits with about 265,000.
So this is like a life insurance policy. I've seen these before. So the money goes into a life insurance policy, but the premiums are, can I say, guaranteed? In other words, if you put $100,000 in and 3 years later you need to get $100,000 out, you could take them out and all you lose is the insurance?
Right.
And the earnings that you could have earned on the money. How much earnings are you getting today on that money, folks? Ain't much.
0.00 pitiful.
Right. 0.00 pitiful. That's cute.
Yeah.
So what you do is you take a lump sum of cash, you put it in an emergency fund with an insurance company. They give you how much of a death benefit?
Well, this one's $265,000 for a man age 55.
Okay, so $265,000. So the idea is you get to use up the death benefit before you die if you enter a nursing home, correct? Or need home health care.
You have actually about $5,000 a month for 4 years. No, just shy of $5,000.
Oh, $5,000 a month. That's $60,000. That's for $240,000 of long-term care.
It's about the same. It's about the same. It's a little bit more for the long-term care.
That's an excellent way for you to dodge the premiums. Now, obviously, they're using your $100,000 and investing it to make a profit and to pay for that long-term care.
They're building the reserves.
That still seems like a pretty good deal to me, because I can't invest that $100,000 in something that's safe and earn enough money to pay for a long-term care policy.
Well, and a lot of people do have what they call that rainy day money. They've set aside some money that is there for their long-term care because they don't believe in insurance. Well, great, don't believe in insurance. Put it in there, and if you want it back, you can take it back. But in the meantime, you've got the insurance basically for parking the money somewhere else other than the bank.
You know, in my 38 years, I have had, for many of those years, a rainy day fund. You know how many times I've tapped into that rainy day fund?
Lots?
Never.
Oh, sorry.
Never. I've always been able to tap into other monies or whatever.
That's right.
Because you have this rainy day fund, you put it in your mind, I'm putting that away and I'm not going to touch it ever. And you don't ever touch it.
That's right.
And lately it doesn't make any money. So this is kind of a way to get a dual purpose on the same dollar.
Yep, and the thing that's important about this is the sooner you get it, the better. I mean, it's the same old story. It's not like buying a refrigerator. You can't just go out and get long-term care insurance without proving that you're insurable. And the same thing with the life insurance. You have to prove you're insurable, and there's lots of reasons that people might not be able to qualify. In fact, 21% of the people applying ages 60 to 69 are getting declined.
21% of people 60, so people in my age group are getting declined. Ew.
So, and another example, same gentleman waited 10 years, right? Put his $100,000 in, he only got $4,700 a month for 2 years.
So it cut the benefit in half.
Cut the benefit in half. Death benefit went down by about $60,000. So
yeah, but it still works. I mean, it still works for a 65-year-old
exactly.
because a 65-year-old's closer to needing the long-term care. Now, talk about home health care and not going into a facility, because based on what I've read, more and more people are choosing not to enter a nursing home, A, for expense reasons, and B, because they're doing a little better health-wise.
Well, over half the claims in long-term care insurance right now are home care claims. And you're right, people generally speaking, they feel like they're in a more nurturing environment. They tend to be they respond better to the treatment that they're getting, and they tend to live longer.
How about a plea to baby boomers to invest some of their money in a long-term care insurance policy for mom and dad? Our last caller, $10,000 a month. Now, he may be in a very expensive area, but I think nationwide it's running, what, $87,000 a year for a nursing home facility?
Right.
$87,000.
And again, we're getting back to that home care idea. Home care, for example, in our area is $21 an hour. Figure out, if you don't have somebody there in the family at night and on the weekends, that can add up to the same as the nursing home.
All right, so here's the deal, folks. We want you to not buy it. We want you to get a quote, and we want you to talk to someone such as Lyn. Lyn makes herself available nationwide. She's licensed to practice in every state in the United States, this long-term care. I shouldn't say practice because you've been doing this a long time. But go to her website. It's iwantmyltc.com, or simply call her at 800-644-1128. I cannot emphasize it enough that you should, if nothing else, get a quote, find out whether or not you can qualify. Lock the insurance company in now, because there's an almost 75% chance that the ladies out there are going to need it. iwantmyltc.com. Back to the Ray Lucia Show right after this.
The Ray Lucia